Super casual.
I love it.
Super casual. So Trevor, we have Trevor Levine.
Yes.
Did I say that properly?
You did. Premise mortgage.
Premise Mortgage. Sorry.
It's okay.
How long have you been with Premise?
We are almost hitting the 2-year mark now. Coming up.
And it's your company?
Correct.
It's your company.
Yes.
Tell me about your company. How did you get started with that?
Well, it was basically kind of a forced move, but it was one of the best things that ever happened to me. So I was working for a broker shop and they got taken over by a big mortgage bank, Movement Mortgage. And so I really didn't have an option. It was all of a sudden, it was just like one day we came in and they were like, hey, guess what? You guys have 24 hours to figure something else out, or we're going with Movement. Here it is.
And they weren't taking you with them.
No, they wanted to take us with us, but it was just so quick. Like I had deals with them going. I was right in the middle of stuff and I was going to lose those deals. And it just caused us so much chaos and I was really busy at the moment. And it was just like, I don't have time to shop brokerages and figure out where I'm going to go and how I'm going to do it. I'm going to lose deals. And like, it was just like, it was one of those kind of like, oh crap moments. Like,
and what year was this?
This was 2023. So yeah.
Okay. So after COVID,
yeah,
or like right at the tail end of COVID. So you're already kind of like, life has been psychotic.
Yes.
Can we stop?
Yes. So I said, you know what? I've always been a broker, but I didn't know what the retail side was like. And I was like, you know what? I'll give it a shot. You don't know what you don't know. Right.
Right.
And so I went to I heard the stories, obviously you hear what retail is about and you hear what being a broker is about, but you don't know until you know. And so I went over there and I did it, and it definitely was not for me. I care about my clients, and every client is the most important client to me, because one of the things that what got me into this business was the very first deal that I did was a single mom with 3 kids. Started crying at the closing table. It just broke me down right there. Like, I'm not a big crier. My wife would say I'm very insensitive with feelings. Like, she's like, you need to open up your feelings more. But I like shed a tear right there. Yeah. And I was like, oh my gosh, I'm actually making an impact on people's lives, and I'm making a difference, and I'm touching people. And it was like,
you want to reword that?
Well, yeah, not touching people. I'm sorry. That was bad.
Was a joke.
No, after I said it, I was like, oh, maybe that wasn't
super casual.
Yeah. But no, you're touching their heart. You're really making an impact on their life and making a difference. She's like, I didn't think this was possible. I went to other people. They turned me down. Banks turned me down. You said you're going to work with me till the end, and you did. And you've changed my life forever. And that at that single moment, I knew this was what I was going to do. Because before that, I had actually went to school and I wanted to work on Wall Street. My background is in finance. And I wasn't quite sure if I really wanted to do this. I was dabbling in it, and it just kind of, it was like, do I want to do it or do I not want to do it? And then I realized, hey, this is like, I'm really making an impact on people's lives. So at that point is what I wanted to do. But when I went to the retail bank, they don't care. Is what the biggest
They're
thing.
employees, right?
Yeah, it's a number.
Right.
There were so many times where I went to them and said, hey, like, can we get a concession here? Or can you drop, can we do this to get this deal? Or can we do, I can't give you specifics because some of it was a long time ago, but so many times I would go to my regional manager or district manager and say, hey, can we do this to get this through? No.
And they have their processes, and like, you have to fit these, we have to check these boxes. That's it.
Exactly. And it's like, there was no willingness to work with them, and they didn't care.
And is it more of just like on their part, they have specific regulations they have to kind of follow, and they don't have that wiggle room?
No, to me, it was like, hey, we know that we're going to lose 25%, 30%, and we're so big that go get another one. And I'm like, well, like specifically, like I was dealing with these people, right? And as I'm thinking about this, the memories coming back.
Yeah.
And this is really what turned me at that moment. As I came to them and I said, hey, like, we can get this through. I know I can get this through, but we have to do such and such thing to get this through. And they're like, no, absolutely not. And I'm like, well, but I know that we can do this and I've done it before. And what it was is on a credit report, when people have when they dispute something, right? Yeah. And a lot of programs don't want to see those disputes on the when you run it through. It's called AUS, right? It's what we get for final approval. Okay. So all I have to do, and I've done this several times before in the broker world, is just say, hey, go to your credit card company and say that you're no longer disputing this charge. Get the dispute off your report. We'll rerun it. We're good. They were like, nope, we're not doing it. I'm like,
why do they care about a dispute?
I don't know why they would. I should have asked that question.
Right? Because doesn't that seem like if they're disputing it,
yeah,
then like that negative tick shouldn't necessarily be there.
They shouldn't care about it. I don't know if it was just, that's actually a really good question at the time. I was more focused on like why this deal isn't going through and what the holdup is, because I've done this a million times before. And I told him, I said, look, these people don't have a home. Literally. They're living in a hotel. They have kids. They have this. They've already stretched themselves financially. They need this house. Like, it was like.
Right. And they're invested in this now. Like X amount of time has passed.
Yeah.
We have a.
They had movers lined up. They had storage costs.
There's multiple families being affected by this.
Yes.
Like real life.
Real life. They'd stretched themselves financially. The sellers were already committed. Like everything was, there was so much hinging on this.
Yeah.
Right. For this little minute thing, they were unwilling to bend. And I just was like, that's it. Like, I can't do this anymore. Especially
when it's something, an easy fix.
Easy fix.
I dealt with something similar recently with it was a big lender, like one of the big national ones. And my buyers weren't getting approved. So we went on to somebody else. I'm sorry, it wasn't you.
No problem.
And come to find out, it was like this previous mortgage that they had on another house that had been paid off already with that same lender, mind you.
Mm-hmm.
And the current loan officer or whoever it was just didn't want to take the extra work to go show that it had been paid off, because it's, they're so big that it's like a different department at a different state. It's not like just going into the system that they have access to it. But the process would be that you wait for them to send you the payoff letters showing you like it's all set and whatever. To speed it along, someone has to put in the legwork and push for it.
Yep.
And it's your own lender. You know that they have it paid off. They can show you that it's proof that's paid off. You have to put in some extra work. Nope. We would rather just deny it.
Yeah. No, and that's another example. It's crazy. So at that moment, I said, I'm going off on my own. And a mentor of mine that I'm still in communication with to this day and helps me out almost every day. It's crazy, but
you gotta have those people in your life.
I thank God for him.
Yeah.
But he's like, you know what? You have the knowledge to do this, and you have the background with numbers. Just do it. It's gonna be hard. It's gonna suck for a little bit, but it's going to be great at the end. And that was what I needed to push me through and open up the business.
That must have been scary though. Just like that big jump.
It's still scary.
Were you able to take those deals that you had working with you, so you had something to start out with, or were you like starting from scratch?
I couldn't, I lost a few.
Yeah.
Yeah. State of Massachusetts, they suck. I'm sorry.
Our wonderful state does everything right.
I only say that because it took 3 months to get my business license approved.
Oh.
And so the way it works with mortgages, right? And I don't know about real estate, but I cannot, once I declare that I'm opening the business, I can, and I have my numbers associated with this business, my NMLS number, I cannot work for somebody else.
Yeah. Same.
Right.
Yeah.
Same. Okay.
Yeah. You're linked to like a broker or whatever. Yeah.
Correct. So at that point in time, I'm linked to Premise Mortgage because I've created the business, I've created the entity, I have all, like the tax, everything is linked to that entity. And so I can't do anything. But I'm waiting for the state of Massachusetts but I'm not.
You're not like in business
I'm
yet.
not in business. Correct.
So you've got these people that have started the process that are like in limbo and like, hey, we love you, but we got to finish this.
Exactly.
We don't have 3 months to wait.
Exactly. So, and if long story short is I actually had to get my state representative involved or else I probably would have still been waiting. Thankfully, I knew the state representative on a personal level.
Who's your state representative?
David DeCoste.
No.
I know him because I'm in Rotary. And so he's a Rotary member and I had a call in a favor and I said, hey, I don't know if you can help me with this, but I'm struggling here to get this license through. I'm losing a lot of business, like I don't understand what's going on. They said that I've cleared all the things that they've wanted me to clear and provide, and I'm still waiting. I mean, it just doesn't make sense. Like, let's get going and you can start collecting your tax revenue.
They probably blamed COVID. They're behind COVID.
Yeah. So after I got him involved, wouldn't you know it, 2 weeks later, I'm approved.
Well, shout out to our state representatives. I had issues over COVID I owned a gym prior to getting into real estate and we were shut down over COVID, like you remember all that craziness. And it was our local state representative, Josh Cutler, that jumped in and saved the day for me and helped me get reopened. So vote, people, at the local level. It matters. It matters. Get to know your state rep. It matters.
So much.
Yep.
So much. And they care.
They do.
They do.
They do.
Honestly, they care. And I think that's the biggest thing. And I think, I don't want to get political here. When they get super big, people think they don't care about the people, the lower level people, they care.
They do.
Yeah.
They remember where they came from.
Exactly.
And I mean, some of them, like anything, there's bad apples.
Everywhere.
We don't need to mention.
No. As I said,
but at the local level, it's good. Like, know what's going on. And they need to know what's going on. So
exactly.
They need to know if people are struggling, if they want their districts to be successful and to do well and their people to do well. So.
And in the end, it's all about tax revenue, right? You're taxing my business. So like, hey, get me in the door so you can start collecting money off me.
Yeah. So you said you're 42. Yes. You're a dad.
I am a very proud dad.
How many kids do you have?
So I'm a stepdad of 2 and 11 and 10. Geez, 9.
The tweens.
Yes. And then I just had a baby girl who just turned 2 on the 4th.
Congratulations.
Thank you.
2 years ago. But
and I love them all tremendously.
Yeah.
And that's another reason I think when you asked me, was it terrifying opening the brokerage, is that I had a baby girl and opened the brokerage at the same time. I think I'm crazy.
Yeah. Well, you got to do it though. You got to do it. Yeah. 2 is a fun age. 10 and 11's a really fun age. That's just like they're still like such little kids, but you see that shift in like their teenage personality coming out with the independence, and like the voice changes every once in a while with the way they talk to you. Like they sound like little adults, but then they're like sick and they sound like little kids and want hugs. And it's cute. Mine's going to be 13 this month.
13?
Yeah. And he's definitely shifting into that.
The teenage.
Yeah.
Years.
For years now, we've been having discussions of like, listen, teenagers typically suck. Yep. And that's normal and that's part of life. And you're going to kind of turn into a little jerk and that's okay. But promise me you won't turn into a big jerk. I'm going to just kind of like give you the look when you're like, teenage jerkiness. Reel it in.
Even big jerks come back to their parents as long as
they just need to be reminded of like, hey, you're going down that route and it's not your fault. It's normal, but you have some control. So let's be aware. Let's pull it in a little bit.
I can speak from experience.
You were a jerk.
The worst. Jerk, it would be putting it very nicely. I was like that. You remember the movie The Problem Child when we were growing up?
Yes.
Yes.
Oh,
I was like that kid.
how many siblings do you have?
I have one younger sister.
And you were awful to her, weren't you?
You know, I loved my sister. We had I I didn't like her playing with my friends or my toys or stuff like that, like, but I was very much the big brother. I protected her all the time, almost to the point where it was like in high school, she never had a boyfriend because no one wanted, it was like, no one's,
No, we're not
yeah,
dealing with Trevor.
yeah.
But you gave your parents a run for their money.
Oh, I've told them numerous times, I'm so sorry for everything that I put you through. But their love in the end kept me as a good person, and at least I believe that I'm a good person to this day, and I'm always trying to get better. But yeah, I was a little stink in the day.
Aren't we all? So we graduated high school around the same time, entered the workforce around the same time. I remember I had a similar situation as you when I first opened my gym. I was working for a private training company. They're a chain. So I was working for Fitness Together in the area. And the owner of that particular one told us, so it was like November, she ran this massive campaign promoting like half off, like buy our 60 session package, which was not cheap, and pay half the price. So like all of our clients are paying like these big numbers, like renewing their packages well before they need to renew. All these new people are coming in. That was in November. And then like the 1st of December, I get a call from one of my clients saying, I'm so sorry that this is happening. What are you going to do? Are you okay? I'm like, what are you talking about? And she's like, oh, I got the letter in the mail that you guys are filing for bankruptcy. I'm like, when's this happening? What?
Yeah, that's
total. And like, it was going to be like around Christmas time, like by the end of the month, like shut down.
Wow.
Shut down. So I'm like, what? Like a total, like suddenly, like.
Talk about from left field.
Yeah.
Just out of nowhere.
Right. And it's like, well, I have to pay rent. I have to do all these things. Like, what is happening? My manager didn't even know. Like, he had just found out. So he had the rug pulled out from under him too. So it was that moment of, do I just do this from like on my own and bite the bullet and figure it out? Or do I go work for somebody again? And I knew at that point, like, I don't do well working for people. I don't do well being told what to do and when to be in and just sit at a desk. I just don't. So that's when I was like, all right, I mean, it's now or never. And I opened Duxbury Fitness at that time and took my manager and I split the client list, and I took half, he took half, and got started that way. But it was 2000. So it was 2009, April of 2009 that I opened my doors, and it was like it was the recession.
Yeah.
So everything like, we came out of high school, going to college, getting all this debt, and then enter the workforce, and like the worst possible time.
Yeah. I remember it clearly.
Yeah.
Yeah.
Yeah. Like it was just awful.
Awful.
Awful, awful. I feel like as Zennials, right? Because we're not millennials necessarily. We're not Gen X.
Yeah. Yeah. No, I completely agree. Like we are in that small little transition period.
Yeah. We grew up without the internet,
without phones. Yep.
It was a different world.
It was.
But we got all of those things when we were still young enough to make it somewhat of a regular part of our lives.
I agree.
But I feel like we maybe got the short end of the stick on a lot of things, and we've had to figure it out. And what I find interesting is a lot of my friends growing up ended up starting their own businesses and ended up as entrepreneurs. And it's just interesting of like, what was it about that generation that this seemed like a better path? And I don't know if you have any insight into like that difference for you of what it was like, what you saw maybe your parents going through or your bosses going through, or being in more of a typical company corporate setting versus being your own boss, and that like, hey, this is the way to go.
So I will say that working in the corporate setting it's not for everybody, right? I can tell you that because that's initially what I did going straight out of college. Are you familiar with Bon Appetit?
Not really, no.
No, they're a big, huge global magazine cooking, but
yeah.
But they
Okay.
also have like restaurants and all this stuff.
Yep.
So long story short is I'm going to school in San Francisco, just a couple weeks from graduation, and I'm bartending, and this lady's talking to me, and then at the very end she goes, "Well, hey, I'm the regional or district something or just high up the chain, right?" And he gives me a card. She goes, "You're in finance, you know numbers. Seems like you love people. I want you on my team." She's like, "I'll give you a job tomorrow." I'm like, really? I'm like, okay. so did the whole corporate thing, worked at the headquarters in Oakland and promised all these things. None of them came to fruition. And I realized, I'm like, corporate jobs. I don't know about this. Put in so much hard work. I give an idea, and then it would go to someone else and go to someone else and go to someone else and then go to someone else. And by the time it got back to me, it wasn't even my idea.
It's like a game of telephone.
Yeah.
I'm like, wait.
I'm like, and that's actually what led me into mortgage business, believe it or not. So that's how I got here.
That's interesting.
Yeah.
Yeah. So kind of follow this interesting path to get over there.
Yeah. But as far as like going back to your original question, I'm sorry, I kind of got off topic, but that's it.
So I don't even remember my original question.
But that's what immediately came to my head when you said corporate. But going back to, how we kind of we were like that middle, like we saw the old school, but we were introduced to the new school, so to speak, with cell phones and technology.
MySpace.
Yes. MySpace, Facebook, all that stuff, the transition to the digital world where our beginning of our childhood was not digital. It was outside.
Oregon Trail was the most of our digital.
Which I loved, by the way.
Oh, yeah. I mean, I died from typhoid fever so many times.
Great game. Yeah, I think it put us at a disadvantage because, at least for me, and I can't speak for everyone, because I'm an old school person. My parents were old school. My grandparents were old school. I was raised old school. You work hard. You put in the time, you put in the work, you put in the effort, and none of them were about technology. It was find a company, work your butt off, go to school. It was that very traditional route, right? And I wasn't into really computers. It was more, my childhood growing up was play sports, be outside, go, do all that stuff. And, technology is not really in computers and all that stuff. Stay away from video games, rot your brain, everything else. That was how I grew up. And so as I got older and technology started to be a part of our life and you needed it to be successful, I was behind the eight ball because it just wasn't a thing for me. And now, even as an adult, I still struggle with figuring out, I'm getting better, but I'm definitely not like, my 10-year-old knows how to work my iPhone better than I do. So yeah. It's like, it put us at a disadvantage, I think. But at the same time, I also feel that it adds a grounding. And because we still remember the way life used to be before technology. And not all change, I believe, is great change, right? Mm-hmm. There's a lot of negative aspects that have come from technology basically engulfing our life. And I try to bring that, so does my wife, to our kids all the time, where we try to actually remove them from the technology. Like, go back to the old school. Yeah. Go back to, hey, being outside, being with nature, being,
talk to people.
Yes.
Like all this stuff now with they want to take phones out of schools. Like, yes, can you please take it away during lunchtime and force the kids to talk to each other during lunchtime and not
all for it.
Be on their phones?
Yes.
Like recess, lunch, library, no phones. That's like the key times, no phones. Because they don't interact. Like they don't look at each other and talk
No,
at all.
no. And they're scared to do it.
They don't know how. Yeah, it's
Yeah.
awkward.
It's awkward. Like, so, like we have to, the 10 and 11-year-old, right? And which is, I'll give you an example with the kids in the neighborhood. It's like, well, can you see if someone, we can do a date? And I'm like, go knock on their door. No. It's like,
Not doing it.
no,
Yeah.
I'm not going to knock on the door. I'm like, well, it's just knock on the door, say hello, see if they want to play. It's pretty simple.
That's one thing I will say that I liked that came out of COVID, because so my son he's going to be 13. So 5 years ago, he was in that age where he had enough independence to go ride around the neighborhood and hang out with the neighborhood kids.
Yep.
And they couldn't do much, right? So it was like, hey, listen, this is our bubble. You have to stay on your bikes. You can't like go to anybody's house, but go knock on doors, get out on the bikes and just be outside and go.
True.
And that's what they did during COVID. Like they explored more in the cranberry bogs that we live on, like than any other time, because there was nothing to do and they couldn't go anywhere. So they're like, I guess this is what we're doing. We're riding our bikes everywhere because we're not allowed to be too close to each other.
Yeah.
So they did learn, like, just go yell at the end of someone's driveway, go awkwardly ride your bike back and forth until someone notices you in the window.
Which is what being a kid's about. I mean,
Yeah. Go find people.
go find people or just be bored and let your imagination run wild.
Yeah.
I mean,
That is one thing. They don't know how to be bored.
No.
And I think as adults, too, we've lost the ability to be bored.
Oh, absolutely.
I find myself picking up my phone during a commercial break. It's like there's got to be something all the time.
It's funny you bring that up. I caught myself doing that where I was cognizant of it a couple days ago. And I'm like, really? I can't even during a commercial, I have to be on my phone. So,
Right. And
Come
it's
on.
like there is
Yeah.
something going on. There is something to look
Yeah.
at. And I'm still like, no, scroll.
Yeah.
Scroll. I know. It is bad.
It's bad.
Yeah.
And I'm like, oh, if I'm doing this, then my kids are seeing this. And then I'm like, oh no. Okay.
Yeah.
Yeah.
My kid's sitting there like reading his summer reading book and he has videos in the background on YouTube.
Yeah.
It's like, I need the noise. It's like, oh no, ruined you. And it's hard to like back it off and to pull it away from him because I'm doing it too.
Yeah.
So yeah.
I get it.
Yeah. So let's bring it into mortgages.
Yes.
So in this market over the last month in real estate has been just bizarre,
Yes.
weird. Things have definitely slowed down a lot. You've seen quite a few markets. What can you shed on? I feel like everyone's saying like this is just a really tough market. Everything's like slowed down, but is it really, or is this a little bit more like this is kind of normal? Like we're doing okay with mortgages. How do you feel about today's market with how well people are qualifying, the interest rates, things like that, in terms of like it's a tough market, it's not a tough market?
It's a good question. So, I don't, it's a yes and no answer. It's a tough market. And for instance, like the inventory is tight, right? In the state of Massachusetts, it's just, there's not a lot of new construction going on.
We don't have room.
Exactly.
And it's expensive for builders.
It's very expensive. And so that being said, with a tight market, low inventory, that creates competition, as you know. And when there's competition, that's a bidding more and it makes it harder for people to get a home, right? But if you look at it from a perspective as like a mortgage rate and getting a mortgage, no. Actually, getting a mortgage now is easier than it's ever been. Right?
Really?
Yes. Because one of the things that has come out of COVID is, it's more regulated for sure. Like you can't just have a 720 credit score and work at CVS minimum wage and get a $900,000 home like in 2002.
Which is good. Yeah. That did not help people.
No, that crashed the market.
It made them lose their homes
and everything else.
Right. So they were happy for a couple of years and then like reality set in.
Yeah.
Like, you can't afford this.
And put us all into, a nationwide recession. So,
Right.
Hey, no, there's good regulation in some aspects is good. But why I say it's easier is because we've, back to this digital aspect of things, right? Everything has gone more digital. And we're now to a point where we're in information overload because of the internet, right? And ChatGPT, and we have all these things at our fingertips where it can just provide us endless amounts of information in the snap of a finger, right? And anyone with a phone or anybody with internet or a computer can get access to this information. Yeah. It's quick, it's easy, it's all right there. So that being said, that's like the mortgage, like they can Google, what is this? Where is this? And they can get access to me. And like everything is now moving to going digital, right? So the process is becoming easier. The access is getting easier. The transparency it's more transparent because the information is at their fingertips. So in actuality if you look at getting a mortgage that way, it's easier than it was. I mean, you can Google mortgage broker in, Plymouth. Boom. Yeah. You're going to have 45 of them come up, right?
Right.
Where if you did it maybe 15 years ago, you're kind of asking, well, hey, how's this person? Or how's that? You're trying to find someone to recommend someone. And then you still don't maybe know if that's the person you want to go with, but now you can just Google someone, look at it and say, they have 105 stars and look at their reviews. And
yeah. So the process or the beginning steps are a lot easier. The research is easier.
Research is easier. To get them qualified is a lot easier and faster. Like, as long as you provide me your documents and get them all to me, which can be done all digitally now in a matter of minutes, right? And I can review them and then get you approved in an hour. It just depends, like that's awesome.
And now, like with cell phones and everything, like the typical 9-to-5 workday isn't a thing.
Yes.
Which is another reason why going with somebody like you versus your standard bank is really nice, because not to make you work on a weekend, but you're going to pick up your phone on a weekend. You can pre-approve someone on a weekend.
That's it.
You don't have to wait for typical banking hours.
No.
I've gotten pre-approvals from people on a Sunday evening.
That's it. I mean, if majority of deals are done on weekend, then I better be doing business on a weekend.
Right.
Yeah.
The average person looking for a home, they're working during the week.
Exactly.
They have the weekends to figure it out.
That's something that is just kind of blows my mind. It's like asinine. I'm like, if the average person is working 9 to 5 and
more than that,
majority of people don't have the time to whatever it is, start looking for a house, putting in offers, doing all this stuff when they're working. Right.
Right.
And so if you're only going to be available to someone to offer a mortgage from 9 to 5, but that's when they're working, well, then you're not making yourself accessible.
Right.
And it's like, so what do you, how, I don't,
and it can be, I just told someone the other day, like having access to a lender as an agent, deals are happening on the weekends. If I have offers coming in, I want to be able to vet those buyers and talk to the lender. Yep. If I have 2 offers and I can get a hold of one lender and vet their strength as buyers, and I can't get a hold of the other lender until Monday and it's a Saturday and we have an offer deadline, I'm going to go with the one that I was able to get from the lender. Like, hey, yes, this is how we pre-approved them. This is these are all the documents I saw. They're strong. They're solid versus the unknown and wait 48 hours to figure that out.
Exactly.
So it's the difference of somebody getting an offer accepted.
That's it. And then going back to why, circling back as all these thoughts are going through my head, why it is more difficult in these day and age is 2 of the biggest things that I see are, one is what COVID created. COVID created this fantastic environment that should have never, ever, ever, ever happened. Right. Like we saw 2% interest rates.
Oh, yeah.
I mean, everyone has this reality that they're going to see 2%, 3%, 4%. No, that was a global catastrophe. That's what in business, you call a black swan event. Okay. Something major drastic happen for that to happen.
And it's not good for the economy to have that. If we have 2%, that means we're not doing well.
We're not doing well. Or something really, really bad happen. Right.
Right.
Which we don't want to see.
But now you have these people stuck. Well, not stuck, but they have a 2-3% interest rate. And it's killer to think like, hey, I want to downsize, but I'm going to wind up with a higher monthly payment downsizing because my interest rate's going to go from 2.5% to 6.5% or 7%.
So that's exactly where I was going with this, is that because of COVID, so many people locked in at that lower rates, that 2 and 3%. And now we're floating at like 6.5, maybe a little, it's fluctuating day by day, depending on the news, right? But no one wants to go from that 2, 3. And so the cycle of owning a home is getting cut off towards the end, right? Because where most people, like when the kids leave or as they get older and they want to downsize, sell their home, whatever, now they're looking at it and going, we're not doing it, because why would I want to go from a 2, 3% and go to a 6%? I'll just, pull out a HELOC and refinance my kitchen or do something else, and I'm still better off. And so we're the cycle of owning a home, where it opens up inventory on the back end of that, of the wheel. Now people are just sitting on their homes and it's not opening up inventory. So I read a stat. This one blew my mind. The baby boomers own 90%. Let me repeat that. 90% of all the inventory in our country.
And they give us crap to not just pull yourself up by your bootstraps and get out there and find a home. I did when I was 20 years old.
So if you really break
Damn you boomers.
Right? If you think about that, you have 90% of all the housing inventory tied up in one generation.
That's crazy.
Right? And they're not letting go of it because they're now going back to that wheel, right?
Yeah.
They're sitting here when they should be unloading and downsizing and doing other things. They're saying no. So that's created a big issue. When you tie that into, also, this is something that comes up but not enough, and this is back with, and this is another thing that happened, this is before COVID, but in the recession, okay? During the recession of 2007, 2008, new construction came to a screeching halt, right? Because we were just over, it was like the boom, right? And we just built everything for nothing. Just kept going, right? Even if we didn't have buyers, we were just like, whatever, hey, there's land, go build it. But after that, it just came to a screeching halt, okay? And so when we got to COVID, all of a sudden we had all these people enter the market because we had 2 and 3% rates. But from 2007 to when we got to COVID, which was that 2020, I think was the start of COVID.
Yeah, it started at the end of 2019. It hit us
right
beginning of 2020.
Okay. So we had about 11-year period where new construction was just non-existent for nationwide. I mean, it was still going on,
but
it was not keeping up with population growth, right? So, and this is a personal theory of mine, okay? If you look at a chart and you look at population growth, it's exponential, right? So it's going to look like this.
Mm-hmm.
And if you look at where new construction growth has been since 2007, 2008 to where we got into COVID, it's like this. And then you tie that into the fact that 90% of the homes are tied up into one generation, and you put those two together. Well, now we look into the reality of why inventory is so tight.
Why prices are so high.
Exactly. Supply and demand.
Yeah.
Yep.
There's just nothing. And in particular, Southeastern Mass.
Exactly.
Where it's congested. There's no room. There's nowhere to go. Or out in Western Mass, you're getting better prices. There's more land. There's still more construction happening.
Correct.
You're not getting it as much over here.
No. So if you look at places that are really condensed, it's just not, there's nothing. I mean, it's not all negative, right? I mean, there's some positive aspects of that because what it does do is it creates value in your home, right? Look at it. We've had annual appreciation that's nationwide, I think, is at 4.27%, but in pockets like here, we're at closer to 11 to 15 in some places.
Yeah.
I mean, are you joking me? If I can get 11 to 15% on my portfolio, I'd say sign me up now.
Yeah.
So it has made real estate a very big investment, a very smart investment because of supply basics, getting back to what we were saying, basic supply and demand. The supply is never going to be able to catch up to the demand ever.
Right.
Because exponential growth.
Right. So
Construction.
I wonder what happens, because I think it's Gen X is like one of the smallest generations, right?
Yeah.
So not to like send off boomers, but as they pass on, right? And
Yep.
that opens up, what are they doing with that inventory? Are they passing it on? Are they holding on to it and it becomes like a generational wealth situation? They're passing it on to their kids. Are they selling? So that's going to open up
That will.
inventory. And then we have the next two generations, Gen X, Millennials are, I believe, a fairly small.
We had actually a little boom in the 80s. So we actually did population growth from about 83 to 90, 89, right in there. Actually, they had a nice little baby boom. I love numbers. So,
so then that's us. That's that little,
us.
that's that kind of zennial pocket.
Yep.
So there was that little boom.
Yep.
So it'll be interesting to see what happens as we lose our boomers. Sorry, boomers.
Yeah.
It happens to everybody.
It's part of life. Unfortunately, I don't like to think about it either.
But if they're holding 90% of the inventory, that'll be really interesting to see what happens, especially around here, because it's just such a weird pocket here in southeastern Mass.
Yeah.
And I get a lot of buyers moving in from out of state, and it's that shock where they're like, what? What am I paying for a ranch? What is happening?
Yeah. And that's the question I get every day is the market going to bottom out? People have this idea, and I would love to hear your take on it. So I look at it as purely a mathematical standpoint and say, well, if there's always, if the demand is going to be here and the supply is going to be here, in reality, does the market ever bottom out in places like this?
Yeah. I mean, people say that to me, and I always say, like, I don't believe there's any crash coming. Like, prices are coming down right now. Over the last month, we've seen a significant shift. Mm-hmm. Certain price points are still flying off the market. If you're in that 500, low 600 range, that's what a lot of new home buyers are able to get. So that's flying off the market. But the higher price points, there's huge price reductions happening right now, but not a crash. Like there's no crash coming because of all the regulations.
That too.
And that's what people, when I say that to people, they assume like, well, of course you're going to say that. You're in real estate. You don't want to believe that there's going to be a crash. But we had a crash because lenders were just doing whatever they wanted to do.
They're being stupid.
They were being stupid, right? Like there was lack of regulation. And now that all that's in place, we don't see any indication that there's going to be all these people losing their homes to foreclosure because they can't afford their mortgages. Like that, the regulations have prevented that. So that's fairly solid. Those percentages are pretty.
Oh yeah.
Your typical standard, right?
I can absolutely tell you that if you don't qualify for a home, you don't qualify for a reason. The people that qualify is because you can. We cross our T's and dot our I's and make sure that like you can afford your mortgage payment, and that's the only way because of those regulations.
Yeah. Yeah, and you have to.
You have to.
You can get creative with things, but you can't.
You can't fudge the numbers.
Right.
I mean, back in 2007, 2008, you were fudging the number. I mean, you can't even say you're fudging the numbers. You were basically just giving mortgages to people who had, if you had a high credit score, it didn't even matter if you had a job. It was like, you got a 720? Boom, here you go.
Right. Yeah, we don't care what else you have. We don't care about the rest of your debt. That's fine.
Nothing.
Yeah.
Yep.
And so in that, like, no, I don't see a bottoming out. I see an evening out, but it's still, I mean.
Well, here's something that I came across recently, right? How many times in going back 100 years, right, of the real estate market, how many times do you think that we've had, let's say, well, how should I put this? Going back 100 years in the real estate market, how many times have we had a year-over-year drop in the real estate market in value? 100 years.
Never.
Decline. 3.
And how far back was that?
100 years.
Well, I mean, like
which ones? Oh,
yeah.
So that was Great Depression, Great Recession, 2007, 2008, and then in the 80s. when we had like
Yeah.
20% interest rates and the high inflation through the roof and everything else. That's it. So if you look at historically, right? I mean, real estate is for that reason, like there's not going to be a crash unless like
Right.
we were just saying, unless
somebody's doing things
bad,
bad.
or we get into a point where we go through another, like, I don't know, like some major gnarly global event, which I don't even know what it'd be, but
like World War III really happens or
something.
something.
Like that. Yeah. But other than that, it's solid.
Yeah.
And one of the biggest ways that I can tell people that this is true is look at the amount of buyers that are now corporate industry buyers, right?
That's true.
They would not be getting into this market if they didn't see this
Right.
as a smart investment. They know what's going on. They know that
how much is that aspect affecting our supply and demand too? And like, it's just the amount that things are going for, because you have these corporate, so many more than ever, right? That have deep pockets, being able to come in and scoop things up.
Yeah. I don't know the numbers on that. I'd be really interested to see the breakdown on the ratios on that, but I do know that they're a big part of this market, and definitely the escalation of prices is because of that. Because when you see cash buyers come in and they come in so over the top, and it's like, we don't care. Well, that's why they don't care.
Yeah, they have the money.
They have the money, and they look.
It benefits them to have it.
Yeah,
tied up somewhere, and
they know that houses are going to continue to appreciate in value, and people are still going to need a place to live. It's not going away. You need a roof over your home. So, and rents are going to continue to go up. What a smart investment.
Yeah, absolutely. So with all that being said, how can somebody get into the market right now? Or, I mean, it's kind of a loaded question, but I guess, what are some incentives or more creative ways for that average person who's looking to either get in for the first time, or maybe they've been in their home for 30 years, and divorce situations are a huge reality right now for people too. That's becoming a big thing, right? It's over 50% of people wind up in divorce, and with the way prices are, it's hard to afford it on a single income. So you have all these boomers, right, that have been in their homes for 30 years. They're ready to downsize, but now not only are they downsizing, they're downsizing separately.
Yep.
What are some options, or do you have different plans, different ideas for people like that?
So there are great programs out there. And that's why I love being a broker, because I have access to everything, and everyone's different on paper, right? No one's the same. No one has the same credit score. No one has the same debt. No one makes the same amount of money, and no one has the same financial goals. So why is every program going to be this work for everyone? It's not. And there's a bunch of niche programs out there, but that's a hard question to answer in one answer, but I'll try to answer as best I can.
Yeah, I guess we're dealing with like new home buyers versus people that have been in their home for a while. They don't necessarily they're not going to qualify as a new home buyer. Incentives, but are there incentives for them? Take it however you want to take it. I give you the floor.
Okay. If you're looking at a first-time home buyer, I think the biggest thing is to be realistic about your budget and where you're looking to buy. A lot of people that I work with are very stuck in a particular area that they want to buy in and live in. Well, your wallet may not take you to that market. And it doesn't matter what I can do creatively. If the math is the math, right? If you just don't.
If it's not mathin'.
Yeah, if it's not mathin', it's not mathin', right? Yeah. You just don't make enough money. That's just the way it is. And going back to 2007, 2008, if you can't afford it, then I can't qualify you. And there's no if, ands, or buts, or I can't, I tell this to my wife all the time. Some people want me to, like, they think I'm a magician and can just like make the numbers magically work.
Right.
I can't make it. I'm very good at what I do and I'm very creative, but I can't magically change numbers. So be open to where your wallet takes you, I think is the first recommendation that I would say, because people get very stuck on where they want to be. And it's like, but I want to live here. But here is very expensive.
Yeah.
And unless you get a new job or a new raise or, come into some money, it's just not mathematically possible. But it goes back to human condition. You hear and believe what you want to hear and what you want
Right.
to believe, right? And it's very hard to change someone's mindset once they're set. But that being said, for first-time homebuyers, there are great programs out there. There's the 1% down. There's down payment assistance programs that are grants.
Can you elaborate on the down payment assistance? I don't think a lot of people don't know about that. How does that work?
Yeah. So down payment assistance programs, there's a ton of them out there. There's your state-funded programs. There's your lender-funded programs. Not to get too crazy into that, just to tell you that where they come from. But first of all, there's the grant that I just touched on. Okay, so what a grant is, it is basically free money. They're going to give you 3.5%, 5% and cover your down payment. And as long as you make all your payments on time and that's it, you don't have to pay it back.
Are there qualifications like you have to make under X amount?
No, sometimes they require you to be a first-time home buyer, right? So first-time home buyers, you can't own a home for 3 years. You can't have any, and when I say that, let me clarify here. You cannot have any ownership interest, right? Because a lot of people
if you're a co-signer or something like that, it counts.
Co-signer, or even if say your parents own a home and they put you on the deed.
Ooh.
This happens a lot. This comes up a lot with me. And they're like, oh, yeah.
But I never had my own mortgage.
Yeah, and I never owned my own home. My parents live there. I don't live there, and I don't pay the mortgage. But you're on the deed. You're a homeowner. And until you come off that deed and wait 3 years, you're not a first-time home buyer. That trips up a lot of people. So I'm glad you brought that up. So that's a good one. But the grant is free money. So if you hear grant, it's basically free money, which is awesome. And there are grant programs out there. So they'll cover your down payment. Boom. And really what it takes is just having a decent credit score. And most often with the grants, they want you to be a first-time homeowner. But there's some out there that don't require it, which is really cool.
Okay. Interesting.
Yeah.
So that person that has been in their home for 30 years, they've had that same mortgage, they could still qualify for something. Potentially. Yeah.
And then you have the repayable. So the repayable is you'll get say you need 3.5% for FHA. Okay. Just using an example here. They'll take the 3.5% and they'll put in what's called a second mortgage, right? So it's literally a second mortgage and you just pay that over a certain period of time. It's usually amortized over 10, 15, or 30 years. Pretty cool. Now, some of them structure it as as long as you make your payments on time for 60 months, then it will drop off.
They'll forgive it?
Forgive it. Yep. Some will require you to pay it back the whole time.
Okay.
Or it can go into as what's called a silent second, and it just sits there. You don't have to pay anything, but then when you sell or refinance the home, then you need to pay off the second mortgage, the down payment.
Okay.
So those are the main ones that you see out there. And there's some great stuff like Mass Housing has a good one. There's a ton of different options. You just need to do your homework.
Yeah.
What I will tell people, and I'm very honest. So when I talk to this is why my clients love me, because I don't bullshit.
That's good.
There's no such thing as free money in this world, right? Even the grant. Yeah, they're like, what about the grant? I'm like, well, yeah. But hey, they're always gonna get you.
All right. So how are they getting you with this one? That sounded so sinister. They're always gonna get you.
But in this world, there's you know that, right?
Yeah.
There's no such thing as free money. There isn't. There isn't. And so they're like, well, the grant, and I had people tell me, well, the grant's free. I'm like, yeah, the grant is free and you don't have to repay it back, but you're going to take a higher interest rate than if you were to get qualified normally putting your own money down and paying closing costs without a grant, you're going to get a lower rate than you would be with this grant program.
So over time, you're actually paying more money, potentially.
Exactly. You're always going to get a higher interest rate because they're going to recoup their money some way.
Yeah.
That's just the reality of it. No one's going to just hand you money because they're going to hand you money.
Yeah.
Yeah. Doesn't work like that in this world.
But it opens up doors to get in. And then if you know that like you can refinance in 5 years, 3 to 5 years or whatever, then you might actually make out.
And that's exactly what I tell people. You have to look at it like an opportunity cost.
Yeah.
Because it provides you the opportunity to get you in the door now. And then, like you said, you can refinance and get that out of your name. And I don't have to qualify you on everything else on the refinance.
Yeah. Especially if you have, somebody like younger people trying to get into the market and they're just starting certain jobs and they know like, hey, you're going to be getting these promotions. You're going to be moving up. You're going to be making more money in the next 3 to 5 years.
That's it.
It sets you up differently when you go to refinance.
Exactly. And you'll have the equity in your home. You own it for 5 years, potentially, you can put that into your mortgage, roll it in or whatever, get it out. There's just all these different things. And the reality is that most people don't own their home longer than 5 to 7 years anymore. Is more these days. So, hey, you're going to sell it off and you're going to have equity and you can take that equity and buy your next home. And now you have down payment and you don't even need it.
Right. Better to get in the housing market now versus trying to wait 3 to 5 years and then.
Exactly. Which brings me to my thing that always kills me when I talk to people. Just like, it goes back to people with they only hear and believe what they want to hear and believe, right? I can present the numbers to anybody. No matter how I present the numbers and show them how much money they're saving or how much money it's going to cost them, it still only goes back to, well, what's the interest rate and what's the mortgage? How much am I paying now? People need to try to look at it as a bigger picture, because owning a home is not it's a big picture.
Right. It's your long-term investment.
It's your long-term investment. Correct. Going back to, and this is kind of going full circle where we just talked about, is when people are always holding off. I'm going to hold off. I'm going to try to time the market. I'm going to wait for the interest rate. I'm sure you hear it all the time on your end, or I'm going to wait for the market to correct itself or whatever it is. That is the worst idea ever. I'm sorry, I'm very blunt, but it just is. And it is for so many different reasons. Homeowners insurance is guaranteed to continue to increase. It's not going to go down. Never has, never will. Especially with what's going on in the fires and the hurricanes and the floods.
It's going to get harder and harder.
It's going to get harder and harder. And these insurance companies need to protect their coffer, right? Well, it's draining tremendously. And the only way that they're going to build that back up is by charging higher rates. That's it. That's the reality that we live in nowadays. It's only going to continue to go up. Property taxes, when have they ever gone down? Property taxes only go up, so if you,
I think Carver's property taxes did come down.
Did they?
They went,
okay,
by like $1.
We'll call it an anomaly.
Yeah, I don't know why, but
that's awesome. But but
housing prices in Carver skyrocketed,
so they made up for it in someplace else. But if you look at it from those two things, right? Those are two things that add to your monthly payment: homeowners insurance, property taxes, big one, and they're only going to continue to go up. And if you look at what we were just talking about with supply and demand and home housing prices, well, they're only going to continue to go up. So if you're waiting now for an interest rate to drop, or you're trying to time a market, most likely, even if you say that you get lucky and you time the market correctly and there's a rate drop and you waited a year, the year that you waited is going to offset the cost from getting where you are now in a couple different ways. Because maybe you timed it correctly and you got a lower 0.5% lower or something like that, right?
Right.
But now your insurance went up, your property taxes went up from the year before, and your house appreciated, depending on the market, 5 to 11% that you were going to buy back a year ago. Well, all those higher costs have just offset the money you would have saved. So you really didn't save anything. So go figure. And on top of that, you lost out on the appreciation value of your home.
Right. And how much did you just throw away renting or
and then
wherever you were?
Exactly. Yeah. And then the renting part of it. And so I always tell people, if you can buy now and you can afford the monthly payment, then it's a good time to buy. And you like the home, then it's a good time to buy.
Yep. Yeah. And I always try to get people to shift into that idea of like, this is your investment. It's not like, yes, we need a place to live. Yes, you want it to be what feels like home. And, you know, it's more than just a business transaction. It's very emotional. It's where you're raising your kids. It's all of that. But also like, this is what gets passed down to your kids. This is
exactly
a long-term investment. So you have to think of it in those terms. And would you ever ask like, when's the best time to put my money in a 401k or in a Roth IRA or in the stock market? Should I wait? Should I?
It's a great question.
I have 10 grand sitting. Should I wait to invest that in stocks until next year until I see like, no.
Yeah. I think even a better one is, should you pay someone else's 401k? Because when you rent, you're paying someone else's mortgage. And the interest rate's always 100%.
Yep.
So if you're going to rent, why not buy? Be the homeowner.
If you can make it happen.
If you can make it happen. Most people can make it happen. They just, for some odd reason, don't want to do it. Or a lot of people ask them why, and they say, well, what if something breaks in the home and then the landlord can pay for it? Well, you have that, right? But hey, you know what? Those are one-off scenarios.
Right. But your rent is paying for that. Like your rent is what it is because it's covering their mortgage plus some.
Plus,
like there's a cushion.
They're making money off of you.
Right. So pay your mortgage and factor in those things.
Exactly. And I saw a breakdown number and it's saying if you looked at a rent paying $2,500 or I think it's $2,500 a month over 30 years, you could buy a $900,000 home. Who wouldn't want to buy a $900,000 home? But hey, you just bought a $900,000 home for someone else.
Right.
Does that make sense?
Yeah. It's a scary thing. I think people feel like this permanence of it, right? Like I can't afford my rent. Like I have places I can go. Like if I can't afford my mortgage, all of a sudden, what are my options? I can't walk away from it. I'm dealing with foreclosure. Like I'm stuck.
That is a scary part. And I can tell you that just from being a homeowner. Yeah. That's the reality of owning a home. It's you have to pay the mortgage, and if something happens, and there's that scary part of being a homeowner. But you always have that option to sell too and go back to renting.
Right.
So it's not
that option. You have the option to rent your place out.
Yep. There are options. I mean, yes, that is a very scary part of homeownership that you have to take on, but there's always an option. It's not like
even if you did get to a point where you're realizing like something changes and you're realizing I'm not going to be able to hang on to this house. Like major life changes happened. Lenders don't just turn around and say, hey, we noticed you had that major life change and you're not going to be able to afford this in 6 months to a year. So we're going to take it from you now. Like, that's not how it works. You have time. A good lender will work with you, figure out options. You have time to figure out how to get out of it before you get to a point where you have no options and it's taken from you.
It's true.
It's a horrible thing to have to deal with, but it doesn't suddenly get ripped out from under you and you get left homeless without warning.
No.
There's options there.
There's always options. And if, you can protect yourself too, get insurance, get a term insurance plan that covers the length of your mortgage. So if something happens to your spouse or you lose your job or something like that, hey, you have something there to cover that mortgage payment so you don't lose your house.
Yeah.
That's something that people don't really think about as well, is that like most often people buy a house with dual income. And this is something I cover with my clients all the time, is that, hey, I recommend that if you have kids and this is a dual income family, go get a term insurance plan. Because if something happens to your spouse, you do not want to lose that home for your kids.
Right. Yeah.
Yeah.
So in ramping up,
Yeah.
because that wasn't like leaving it on a bad note, but it was a little like doom and gloom.
Yeah, that was a little
Foreclosures.
heavy. Yeah.
Let's lighten it up a little bit. Do you have any advice for the new home buyer coming in of where their first step should be, giving them hope that this can happen for you, and maybe the person that's hanging on to that 2.5% interest rate but really needs to downsize? Maybe they've had a life event where they're now on their own versus with a spouse with this home, and they know they need to downsize, but they're afraid of losing that interest rate.
So I'll answer the first question, and I'll try to get to the second one. First one is,
Leave us feeling warm and fuzzy.
Yeah.
If you can.
It's not all doom and gloom. You can get a home. You don't need 20% down. There's, like we just said, there's programs out there that if you don't have down payment, you can get in. As long as you have a steady job, make a decent income, low debt, you can get in. Yeah, the housing prices are going up and markets are tougher, but it's not impossible. Get a good team. And I say this, get a great team. The team that you have will get you into your home. Get a great real estate agent, get a great lender that work together.
Do you happen to know any great real estate agents?
Oh, I'm looking at one right now. But that I think can make the biggest difference in the world, is take the time to do your due diligence on your team. Get your agent, get your lender, make sure that they work together, and you will get your home. And be patient. Don't jump into it and just go, oh my gosh, I got to have it now and right this second. It's a process. It takes time. It takes you doing your homework and understanding the costs, understanding what goes into it, and understanding how you can improve yourself and your qualification. Because there are ways to work to get there. And a good lender can say, hey, look, we can do X, Y, and Z. And if you do this, this, and this, then your chances of getting in the home are going to go up by 100%. So that's what I would tell first-time home buyers. Now, the people sitting on 2-3%, love it. I don't know. It's like
you're screwed.
Yeah.
I don't know.
Yeah. I probably wouldn't sell my home too if I was sitting on 2-3%.
But on the flip side, if there's a lot of times, like, people refinanced at that amount, right? Yep. So for those people that have been in that home for decades and they refinance at 2-3%, they probably have very minimal mortgage. Like, they probably paid down that mortgage a lot, right? If they have much of anything left, and their value on that house skyrocketed. So you're coming out of that with a hefty down payment.
Hefty. To
put down on something else, even if you're at a 6.5% interest rate. Hopefully your situation allows you to have a very small mortgage.
Yes, that is correct.
You've been paying
most likely
a lot of principal for the last 5 years that you've had that 2.5% interest rate.
And the equity since COVID has gone through the roof on everyone's house. I mean, the majority of homeowners that have equity in their home, we've never seen this in the history of homeownership. So yes, a lot of people do have that equity, and they do have that money to put down for a home. I guess it just goes back to the math, but you are absolutely correct. Like, you could potentially sell your home, and maybe you do have to take a 6% mortgage, but if you're downsizing and you have all that money, it's going to be a very small monthly payment, a very small mortgage. And it's probably going to be realistically probably the same amount of money that's on your existing mortgage right now, even at 2%.
Right. Yeah. Yep. And that home is still going to appreciate in value.
Exactly. Yeah.
How can people get in touch with you, Trevor?
You can look me up on Facebook.
I will plaster your cell phone number out there. He accepts calls at any time of night.
I accept 9:00. I'm in bed, putting the kids in bed.
Yeah.
Other than that, it's fair game. Wife knows the deal. Call me whenever you want. Even weekends.
Do you prefer text?
No.
Okay.
I'm very open to everything, and sometimes I prefer a phone call because buying a home is really emotional.
Yeah.
Yeah. And I want to feel your emotion.
And you want to, like, when I have people reach out as like new potential sellers or buyers, I want to talk to them And that's like, at least, like, I want to sit in front of you and make sure that this is a good fit for both of us.
Exactly.
And make sure we connect. And if I can't sit in front of you, a Zoom call. And if I can't do that, then a phone call. But I'm not agreeing to anything over text. I need to know you're a real human. I need to know that we click.
It's true.
Because you need that team.
It's a two-way street.
Yeah.
Absolutely. And especially on the mortgage side of it, it's very detailed, some of the stuff that I have to go over with you. And a text just really doesn't do it.
Yeah, it can feel invasive for people. Like you're telling you all my bad financial habits, right?
Right.
Like, and you judge everybody, right?
Oh, absolutely.
You're spending your money on what? What's the matter with you?
It's judgment-free zone over here.
Yeah. And are you on the social medias?
I am.
Okay.
I'm on Facebook, Instagram, and YouTube.
Awesome.
I'm not on anything else at the moment.
You're not on Snapchat and doing like the TikTok dances?
No, I don't. No, I'm working there on it, getting there.
Please don't.
I don't want to scare people.
I will tag all your social media.
Thank
And
you.
I think I have someone to send your way.
All right. Love it.
Yeah. Thank you. I think like there's so many more things we could talk about, but
this was such a great conversation.
we'll
I love it. Very flowed perfectly.
Yeah.
Great.
Awesome. Thank you.
Love to be back.
Yeah, absolutely. I will tag your social media, throw your number out there, website, and if anybody wants to get in touch with Trevor, call him up.
And hey, Vicky's a rock star.
Thanks.
Anyone needs to buy a home, please give her a call.
I try. Thank you so much.
Thank you for having me.